Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets for You. In today's video, we'll be looking at the key economic events and data releases from October 13th to October 17th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets for You. I've set the dates from October 13th to October 17th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Please take note that U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation, so please monitor the calendar closely for any updates. Let's dive into this week's events. We won't have any high-impact event on Monday due to U.S. banks will be closed in observance of Columbus Day, which may impact market liquidity at the start of the week. Tuesday starts with Australian RBA meeting minutes and NAB business confidence, UK employment figures, German ZEW economic sentiment, Canadian building permits, and Fed Chair Powell's speech. Wednesday features Eurozone industrial production, US New York Empire State Manufacturing Index, and Japanese machinery orders data. Thursday includes Australian employment data, UK GDP and industrial production figures, and crucial US retail sales, Philadelphia Fed Manufacturing Index, and PPI data. Friday concludes with US building permits, housing starts, and industrial production figures. This week's key market-moving events will be Fed Chair Powell's speech on Tuesday and US retail sales data on Thursday. Australian employment figures on Thursday will also be important for AUD pairs. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and the British pound against the US dollar, as both instruments face significant data releases and are showing interesting technical setups. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6473, with the price strongly moving lower below the 20-day moving average. The pair faces important employment data on Thursday, which could provide significant volatility. Looking at important levels, the Australian dollar against the US dollar has support at 0.6417 and 0.6325, while resistance can be found at 0.6538 and 0.6625. The price movement below the moving average is a bearish technical development. The stochastic oscillator is moving lower, entering the oversold area, suggesting the pair may be due for a bounce, but the overall trend remains bearish. Thursday's Australian employment figures will be particularly important to watch. The previous reading showed a loss of 5.4 thousand jobs. The 0.6417 support level will be crucial during this release, as a break below could accelerate the downside movement towards 0.6325. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3354, with the price trying to bounce back toward the 20-day moving average from below. The pair faces UK employment data on Tuesday and GDP figures on Thursday. Looking at key levels, the British pound against the US dollar has support at 1.3274 and 1.3142, while resistance stands at 1.3442 and 1.3586. The price is attempting to recover after the recent decline. The stochastic oscillator is moving near the oversold area with potential of crossing higher, suggesting the bounce may have further upside if momentum continues. Tuesday's UK employment figures and Thursday's GDP data will be closely watched. The 20-day moving average will act as a key resistance level during this recovery attempt. A successful break above could open the path toward 1.3442. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Tuesday's Fed Chair Powell speech and Thursday's US retail sales data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.